Really glad to be among these experienced, perhaps the Khans and the Bachchans of reinsurance business on both sides that I have in various markets. Well, it's indeed a pleasure for me to really moderate this session. And we've seen the importance of reinsurance post-pandemic, and particularly in India, you know, how the reinsurance supply was during the pandemic and after the pandemic. And that's why this is very, very topical session with the objective that the government has set up. And you heard the Finance Secretary and also PFRDA Chairman and LIC Chairman, LIC's MD and CEO about, you know, the insurance for all by 2047. And all will have to play a role, including insurance and reinsurance companies. So that's the theme that we have for today. India, if you look at, you know, I think all these guys need no introduction. Srinivasa, Vasan, Hitesh, Joshi is a veteran in GI. So we have, you know, GI experts, we have LI and health experts on my side. If you look at some data I would like to give you from some of the global audience and also some audience within India. The Indian economy is expected to be 10 trillion by 2030. Some of the data that I could pull out. It's a huge number. It's expected to become 25 to 30 trillion by 2050. Can it become the largest economy in the world? Not threatening anybody, but I'm saying that's the kind of numbers that's being projected in the economic world. And now India, as you know, is the 5th largest economy with 4.27 trillion is expected this year. So it's huge numbers that I've been talking about the numbers since morning, so I think that's what I feel great about. And if you look at the whole income of average Indian is going up every year. And insurance sector, if you look at, I mean, many of us work in insurance businesses and some of us in the pensions, etc. But I'm saying majority in insurance business, and we see that I think most of the business is happening on tier 1 cities. You know, you're having multiple policies in the same family. But have we really reached out beyond tier 2 cities or perhaps tier 3 cities? I think there's a lot to be done in that area. And that will really be truly reaching this goal of insurance for all by 2047, because PMJJY is not enough. I think you have to go beyond PMJJBY. So I think we need to really see, are we ready as industry? And I think I'll just maybe start with some open-ended question. As an industry, and I think I'll start with Hitesh, are we ready as an industry to really meet this challenge of insurance for all?
Good morning and thank you. I think as a risk management professional, we are more than willing to accept risk. And talking from GIC's angle, we have been kind of so far the only reinsurance company. So absolutely we are geared, we are open to the challenge. And it will be GIC's role in supporting the entire insurance sector, because insurance is possible because of reinsurance. That is a given. Without reinsurance support, insurance just is not feasible. Talking about insurance for all, I think there are certain variations in how it is interpreted. What is it that is the coverage expected for all? Is it the appropriate coverage or is it a comprehensive coverage? There are huge challenges. If we go back to 2000, 2001, before the sector opened up, the penetration was 0.56. Today the penetration has still not crossed 1. It is between 0.9 and 1 during last 3 to 4 years. On the life side, there has been a drop about about 20 basis points, 40 basis points during last 2-3 years. So there is a huge challenge in moving from 0.56 to, say, below 1 in these 25 years of the opening up of the sector. So that should give us probably some idea as to what it will take to provide appropriate or a comprehensive coverage for entire Indian population by 2047. There is a huge challenge, and we have to kind of fire on all cylinders. We have to do everything possible. Despite that, there will be huge challenges because if you look at the coverage and protection gap, even in developed countries, there is a huge protection gap. If you look at certain events, say some of the hurricanes, the protection gap is ranging from something like 50 to 75%, even in developed economies. So, talking of India, it is about 92% protection gap. The challenge is huge, opportunity is huge, and every single lever we have to utilize to achieve this goal. Thank you.
Thank you, thank you. And I think the same question I'll extend to you, Srinivasa Rao. I think you've got a lot of experience in India, and you can perhaps relate much more on the life and health side. How do you see, is the insurance and reinsurance ready to really meet this goal of insurance for all by 2047? And what do we need, what does it entail in terms of the whole efforts that the industry will have to make?
Yeah. Am I audible?
Yeah.
Okay. Whether insurance for all by 2047, is it a goal that we should be aspiring for? The answer is indeed yes. I think if we want to call ourselves a developed nation by 2047, insurance will be one of the definitive parameters to check on how we have developed. As the family structures are becoming more nuclear, I think insurance becomes quite inevitable. Whether we are geared enough to reach that goal and what are the steps that need to be taken. I feel that there is a lot that needs to be done for us to achieve this objective, a very good objective of making everybody insured. What can be potentially done? I think it's very important to look at affordable products. I think as an industry, we had spent a lot of time focusing only on savings business, and that has become perhaps a bane at some level. And as insurers are trying to look at term business, I think the possibility of expansion is increasing. The catch is we would want to look at the uncatered population with the past experience of the creamy layers that you have in the books. While it needs to be affordable, it needs to be commensurate with the risks that the population is bringing to the portfolio. If an appropriate study is conducted and insurance companies are willing to go into the areas not catered thus far, I am sure we would be able to progress well. And as reinsurers, be it Munich Re or any other reinsurance company, I think we would be happy to support in this journey. One thing is quite evident for us as we are trying to expand. The quality of evidences we seek for insurance seems to be a little bit of a suspect when it comes to the deep down rural areas. What alternative mechanisms we can have to gain comfort that the right lives are getting insured and with the right information that we seek for doing appropriate underwriting. In my considered opinion, it's a very good goal and can be achieved if all of our efforts are collaboratively put and we are able to move forward. And I think we should be trying to do that in a more substantive way than what has been done so far. That's my limited answer.
Thank you, Srinivas. Absolutely. We really have to go deep down beyond the current target market that we have if you were to achieve this goal of insurance for all by 2047. And we got Vasan here, who's also got exposure in other markets, not in India, but I think we can really learn from some of the other markets with the similar goals. Perhaps may not be the goal like insurance for all, but I think the governments would also be looking for how can we provide insurance to majority of the people. And I think the challenges in Asia are similar in all markets. It's not like just India, we got low penetration, but if you look at Southeast Asian markets, Malaysia, Indonesia, Thailand, Vietnam, Laos, all of those have very low penetration. So what sort of initiative that you see that the government in those markets are making to spread the insurance and perhaps increase the penetration, and how the insurance and reinsurance companies really helping that objective?
Thank you, Sunil. Before I answer that question, just first of all, just wanted to say, very excited to be here. And as Sunil mentioned, Pacific Life Re, we are relatively new to the market. We entered last year. So a lot of the insights I'll be sharing would be from my experience in other markets, so please bear with me. And last thing I'll say before I answer the question is, having met these teams, panelists sitting alongside me, I'm looking forward to a very insightful conversation. But if this does descend into like a White House type conversation between Trump and Zelensky, then I say, please enjoy the show. So with that, what I've seen in other markets is that the regulators tend to be a controlling force. So quite interestingly, a lot of the insurers are trying to push for growth. And the regulators are there to then sort of say, no, you can't do this, no, you can't do that. What's very exciting and energetic in this market, I find, is the regulators are moving at a speed almost faster than the industry to encourage growth, encourage investment. Like as you see, regulations have become more principle-based. The foreign investments allowed in the country has been changed. So very exciting, very energetic, and in fact, the regulators are asking me, how can you bring more capacity to the market to support the growth? And whereas in the other markets, I see that pace is a lot more slower. So my insight and advice to this market is to seize that opportunity, seize the freedom given by the regulators in this market to go after the market, go after the unserved segments, like Srinivasa has just mentioned, understand their needs to provide coverage, to get to the insurance for all by 2047. Now, the last parting thought I'll say to that is that to do it in a very responsible way. So when the regulators have given us the freedom and the trust, it's very important we don't abuse that trust. So we work alongside those guardrails and just make sure that we go along a very responsible growth path, if that makes sense.
Thank you. Thank you, Vasan. And I think in all of this, if you look at when we say insurance for all, I think there has to be somebody to distribute that to the products because it should be accessible. I think accessibility is extremely important. When we talk about 1.4 billion population, so many families across the length and breadth of this country, just imagine how many distributors will we need and how will we distribute it in the deep root, which is tier 3 and the rural areas. So that's, I think, one of the challenges that we have. So I think I'll just ask Hitesh, and particularly on general insurance side, because on a general insurance side, you've got various products which, I think this is hugely underpenetrated market that we have on the GI side. So how do you see the distributor, the whole channels, what sort of possible distribution channels probably would be coming along over the next decade?
I think it is a very well-known saying, or whatever you call it, that insurance is not purchased, it is sold. That emphasizes the challenge of the challenge that the insurance intermediaries face vis-a-vis any other sector. On the flip side, at the same time, if you compare the insurance sector to other financial sectors, say maybe banking, mutual fund, any other financial product, probably the friction cost of the insurance value chain, including on the reinsurance side, is substantially higher. If you compare with, say, forex markets or call money markets, capital markets, and any segment, sub-segment of the financial market, insurance value chain has a highest friction cost, and I think that is where a lot of work is required. Of course, I think InsurTech and the online sales is going to help us a great deal in terms of mitigating and controlling this cost. So that is one major part. If you dissect the insurance value chain, there are essentially 3 or 4 major components. One is a claim. And in terms of claim, there is only one cost one improvement that can be made is mitigating the frauds. Distribution is another major one, and the third one is a capital cost, which of course, given that insurance and reinsurance go together and they tap the global capital markets, so there is a huge capital efficiency achieved. So I would like to say that it is the insurance intermediation which has to do the heavy lifting, given that the friction cost is high. And apart from that, given that a lot of more data availability is there, the insurance intermediary's role will undergo a massive transformation. As people have ready access to the data information about insurance products, democratization of the financial information, and more financial literacy and more education in Indian context. I think insurance intermediaries will have to move up the value chain in terms of helping the clients, particularly on the commercial space, getting more data, analytics, risk modeling, and of course, capital optimization. Of course, with regulation further opening up the space, maybe captives will come in. So that will be another area. So insurance intermediation has to go up the value chain in line with the trends that we see in the developed markets.
Yeah. Thank you, Hitesh. And Vasan, I think the same thing. Maybe we can benefit from your experience in some of the other Asian market. Apart from the standard, bank assurance and agency distribution channel, those are the prominent ones. I think it's most of those. Is there any emergence of any other distribution channel which perhaps could be the future in distribution in your market?
Okay. So a lot of our consumers today, a lot of the people today are very tech savvy, right? A lot of people are busy, their lives are extremely busy, they are impatient. They don't have time to spend with our agents for 1 hour, 2 hours, going through underwriting forms and all that things. They want to buy a product on their terms, when they are free, when they are ready to have a conversation. So I've seen digital distribution picking up in some markets. It's not an easy formula to crack for digital distribution. It can be difficult because insurance product, a lot of times is a sold product, right? It's complex, it needs explaining and so on and so forth. But in some markets where I've seen it become successful, it's where it's a hybrid sort of function. You have an online platform with people in the background being able to answer your questions, or having AI chatbots that can answer questions on very complex features. What are the best products for you out there? What best suits your needs? And so on. And interestingly, some of this distribution, they're based out of these WhatsApp channels and chat, Telegram and all that kind of stuff. So people are buying these products on their own terms. They chat for 5-10 minutes. They'd go off and do some work. They'd go off and run to their errands. They'd come back, the answers will be there, and they'd pick up right where it left off. So they don't have to commit 1-2 hours at a go to buy a product. So this channel I see is growing in some markets, and a lot of people are quite excited because it's run on their terms and doesn't take up as much as time as they usually do. Again, I don't see this as just completely replacing our traditional channels as agency and bank assurance, but to complement the existing traditional channels.
Yeah, interesting. And I think the new generation is very tech savvy. If you look at, I think these days people started monitoring and controlling their exposure to the phone. I think most of the time people are on phones, so that probably can become the critical distribution channel. So anyway, I think let me just go to Srinivasa. What do you see, the vast country, huge country across the length and breadth, people living everywhere. Any innovative distribution channel that you see possibility on the life and health distribution for distributing the products in India?
I would not be competent enough to speak on the distribution models because I don't think as a reinsurer we are deeply involved in that. But I would guess that the existing distribution models are not adequate. I think they need to be augmented, whether through the use of technology or otherwise. I think models that have worked in other industries may have to be looked at, and perhaps we need to gain inspiration from. My sense is that a combination of feet on the street and use of technology would be the way forward. Using only customer bases that are existing right now and using industries or institutions to bring the business to the insurance companies perhaps may not be adequate to reach the, a very high goal of insurance for all. I think it needs to be a combination of things. But I would say this only from a very limited third-party viewpoint. I think insurance companies are far more equipped to understand the feasibility and more appropriately the what to say, practicality around these things. So that's my limited point. Thank you.
Thank you, Srinivasa. I think the fair view, I think if you look at, I don't think you can really be meeting this insurance for all needs just by existing distribution channel, because it's a major challenge for all. I mean, look at the acquisition cost of your face-to-face distribution, your agency distribution. Your first premium just goes into the acquisition cost, and so I think it's not sustainable. So therefore, there has to be, some innovation on how do you distribute to the mass. And I think this Bima Sugam is perhaps one of the best initiative that I see as of now in terms of creating the whole infrastructure, and how do you create the distributors at the Gram Panchayat levels. Can you imagine? I think it's amazing thoughts that has come thanks to IRDI and then the leadership at IRDI. This is going to change the way the products will be distributed in India. And this goal settings at the village level, district levels, the Gram Panchayat levels in terms of providing insurance to all, and also hiring or perhaps recruiting the agents from those villages. Because insurance is a product of trust. It doesn't have any visibility. It's not like mobile phone. You look at the color and it's not like fridge or a car. It's a very boring product. Invisible document. Nobody reads the document. Some insurance professionals don't understand the insurance products. Think about the customers. So I think that probably would be a good beginning, really, to distribute products with very, very efficient distribution cost. And this will help to reduce the, because otherwise, if you want to sell the low ticket size product and you got large fixed cost, it's not sustainable. Perhaps that would be the future of once it get done with the standard products, probably it can be used by the insurance company to sell maybe the next complex products on that. Interesting. So the product innovation, I think reinsurance has, can play a critical role, because I've been on the both side. I've spent a lot of time on the direct insurance companies in LIC, and then also Kotak Life Insurance, ICICI Prudential, and also spent a lot of time on the reinsurance side in Swiss Re and now in RG over a year. I think the insurance companies, actuaries, and the products teams are extremely busy in just day-to-day activities, and the reinsurers do have a critical role because they do have expertise in the risk management in terms of design and aligning the design in line with the needs of the customer. So how do you see on the GI side, I would say, Hitesh, reinsurers can play a role? It's not playing as of now. I think it's just you're providing the capacity, and that's where the insurance companies comes to you with the cheapest premium rates. But how could reinsurers on a GI, and also on the health side, on the life side, so how could reinsurers play a role on innovation in the products?
Presently, if we look at the non-life side, there is this product which is making huge headlines on the surety side and surety bonds. And it has been in the press for almost last 3 to 4 years. That product is getting introduced to the insurance market. Presently, so far, it has been sold by the banking sector with a collateral, and now it has come to the insurance sector without collateral. So there is no fallback or no defense mechanism in case of a surety bond getting triggered. The reason why this product is being pushed is that there is a tremendous demand for the product from the infrastructure sector. All these roads, bridges, airports, all these projects, the contractors need to provide the surety to the owners in terms of, say, build, operate, and transfer and all that. So though this product has been in talk for, say, being pushed at various forums, debated, there are various hurdles. Say, for example, there are regulatory changes in terms of what kind of collateral can be provided, because the moment the collateral is removed, the cost of the product will go up, and insurance companies will find it much more difficult to compete with the banking sector. So that is one major challenge. I think product innovation has a very major role to play, but it has its own limits. You cannot customize a product beyond a point. I think Sharmaji touched a very right point in saying that face-to-face distribution is the weakest point, because that is what is pushing up the acquisition cost and distribution cost. It is only a group or maybe government pushed, government supported group purchase of insurance. Say for example, say cooperative societies have to buy insurance. So it is a legislated thing. Then micro insurance, again at a group level. Because face-to-face is not going to work. I mean, despite the technology, it has its own limitation. Product innovation, thus, reinsurers can support based on their experience of the global markets. If one particular country does not have that particular product, it can definitely help. But in terms of the penetration, as I say, and it can be debated, insurance intermediation has a major role to play apart from the economizing the cost of the entire product per se. Thank you.
Thank you. I think that's one other related question, and I don't have other speakers who got GI experience, so I thought that maybe I'll take this opportunity to use your experience. There is a huge underinsurance on, let's say, home insurance, home content. People are not aware that they need to insure their home. Unlike some of the other markets like US, UK, Europe, I mean, first thing you do, wake up in the morning, say, what will I do if my home get damaged or it has a fire or whatever? I mean, believe me, if you actually just hire people to raise their hands, only 10-15% of the home contents or home will be insured. I don't want to do that, but I'm saying, how do you deal with this problem of huge underinsurance, and particularly, I mean, house is the most vulnerable, right? If you don't have the home and you're not insured, you are on street. And I don't think anybody would provide for reserves on an individual level to actually remake their home, because that's the lifetime income is put into the, making the home. So how do you, and it's in reference to the insurance for all, it's also an insurance, just not the term insurance. How do you see the role of insurance and reinsurance companies really to have this, fill this gap in underinsurance?
I think that we can be only cautiously optimistic here, because I'm not a very great believer that people will start buying insurance easily. Because if you look at Indian territory, I mean, it is a vast continent. There are areas, say, from Delhi side, there is a fault. And then there are areas where there is not so much exposure to earthquake. So a human mind essentially being optimist, and then it is, we are all risk management professionals, and we interact and we get to know about all these unfortunate accidents and incidents. Say, for example, we come to know about wildfires, we come to know about a vessel hitting a bridge in US, we come to know about tsunami. We, day in and day out, we come in touch with this. But despite that, as Sharmaji rightly said, if we do a maybe survey, not many would be taking the insurance. Despite being in the industry, I think there is certain basic human optimism which is against it. So unless it is very deeply ingrained, I think we discussed in the earlier session, the introductory session, that it has to be introduced at the primary school level, that it is a matter of culture. But again, awareness and culture is not going to solve the problem totally. We in GIC are writing from 140 countries, and we are also writing from US. If you see Florida, almost every year, every second year, every third year, a major hurricane is hitting it. Despite that, the penetration is something like 30 to 40%. There is, if you talk theory, I think all boxes are ticked. Affordability, it is there. Accessibility, it is there. What more do you want? I mean, acceptability of the insurance community to honor claims, it is there. Everything is in place, but still the penetration is something like 30%. And I think there is per se no solution, in a way. Because it is ultimately the buyer has to see the value proposition. Despite hurricane hitting Florida every second year, third year, the intensity and frequency of hurricanes is increasing during last 5 years. General insurance industry and reinsurance industry has seen catastrophes in last 10 years, which are breaking records every year. 17 was the worst year, if you look at the worst 5 years in the general reinsurance industry, they almost fall in last 10 to 15 years. That is the impact and intensity of the climate change. Let us take an example of Dubai, where nobody had expected flood. So we saw it in, I think, Gurgaon. So flood is happening in absolutely unexpected places, but probably it is optimism and maybe it is not hitting an average human mind hard enough that he will go and buy insurance. Ultimately, there is also another angle that if I see a very, very shocking news that, okay, some unfortunate event has happened, maybe it will have impact on me for, say, a few days or a couple of weeks. After that, I think I will be able to absorb it in my psyche that, okay, it is part of life. Maybe it is connected with the risk culture, but not entirely. It is a human nature. And if we go by the penetration of the developed countries, I think it is really an ambitious target of 2047. If we say that comprehensive insurance for all, what we can target is the appropriate insurance for all. And that can be, that is where the government has a major role to play by like this Pradhan Mantri Fasal Bima Yojana and Pradhan Mantri Jan Arogya Yojana. Despite these two major schemes, which are of scale even from a global perspective, our penetration has moved from 0.56 25 years back to today below 1, and that has been also accompanied by opting up of the sector to the private sector players and also intermediaries in a very big way. So there are inbuilt stickiness, there are inbuilt inertia in the system, which is not easy to overcome. And of course, insurance, in terms of the way India is, we will be moving to, say, middle income status. In financial hierarchy, I think insurance comes right at the top. People would like to increase the standard of living, and they would like to protect their other things, and maybe insurance will come last. I don't think that can be avoided or easily changed.
Thank you, Hitesh bhai, for your perspective on GI. Srinivasa, on the LI side, on the life insurance side, as I said, I think most of the people in insurance companies are busy day-to-day fights. How could reinsurers play a role in terms of innovation on the product development? And what sort of products do you think would be coming in the next decade? What is the future of the products? Because it's, as of now, it's like a commodity product. So what roles a reinsurer have to play in future?
I think as far as product development is concerned, there are few products which are already looking futuristic. When we see what is the current shape of life insurance industry in India and what products typically they are selling, if you look at the volumes, a large part of the business is still savings. Term is picking up. So protection focus has to increase. There would be components of protection that are currently not being sold in adequate measure would be taken up, critical illness being one such. I also believe to make sure that everybody is adequately insured, there are bound to be products which are currently not available, like long-term care. I also believe that products which are not just there for insurance, there should be more products for prevention. I think that should be the approach we need to take. Whether it would qualify from a regulatory standpoint, I don't know. But I think the winners would be those who can actually make sure that the insured event doesn't happen. Not by declining the payments, but by making sure that the insurance awareness and the associated benefits of avoiding a claim event is better managed and the insurers would be more profitable. So my view is there would be habilitation type of product after a hospitalization. Those type of products are more futuristic. I believe annuity has a big role. We had lots of insights given by the PFRDA chairman in terms of what's the approach he would want the industry to take. I think there is a lot that needs to be done in the term of pension and annuities. I think it's increasing, but if we say that in the next few years, 20% of India's population would be more than 60 years of age, there would be definitive need in terms of pension products. Coming to what reinsurers can do, I'm sure there are many products where reinsurers can support. Some of the products where there is not much need for past data, it would be easy to do. In terms of annuity type of coverages or longevity risks, I think the need for credible data becomes essential. Some reinsurers would be willing to use proxies from other markets and may start. But usually I find that reinsurers prefer to have a lot more data, credible data, before they embark on supporting the industry on some of these product lines. So that's broadly what my sense is.
Yeah, thank you. And in your markets, in Asian markets, do you see a reinsurer actually is just providing the quotation on the products designed by the insurance company, or you proactively actually have the ability really to influence the product design or be part of that in Asia?
Definitely the latter. So as reinsurers, as Srinivasa mentioned, we play a crucial role here. But it's not just reinsurers. It's reinsurers in partnership with insurers, in partnership with distributors, in partnership with healthcare providers, in coming up with designs that make sense, that stand the test of time, right? It's very easy to fall for growth pressure and shareholder expectation pressure to come up with designs that are easy to sell but then have long-term repercussions. Just to share a few examples, and I'm not saying these examples are appropriate nor inappropriate for this market, because obviously when it comes to India, we need to think about cultural differences. People have different values here versus different countries, so take it with a pinch of salt. But I'll give you an example of things that have worked and have not worked. So in Korea, for example, about 7-8 years ago, they launched a simplified issue product. So this is covering critical illness with just 3 underwriting questions. That's it. No medical, 3 underwriting questions. So first time we hear it, obviously we as actuaries, we are very, with a risk management mindset, we fall off the chairs, right? We say, what? This is a crazy idea. You're going to have anti-selection, you're going to have fraud, you're going to have very high claims experience, and that was the initial reaction. Fast forward now 7-8 years, it has been actually a great product for the market. What it's done is provide coverage for people in their 40s, 50s, 60s who have some minor pre-existing conditions and struggle to get protection. So now they've got protection. You've got a large population who've bought the product, so it takes care of the anti-selection and of the fraud and abuse. And obviously you put guardrails around it. You don't sell a fully underwritten product alongside the simplified issue product where people can choose, pick and choose. If I'm healthy, I go here. If I'm unhealthy, you go there. But you just sell this simplified issue product. So a good success story where innovation has actually pushed more coverage. And if you think about insurance for all by 2047, there's this kind of innovative ideas that we need to bring to the market. But again, as reinsurers, I think, with great power comes great responsibility. So there are examples where people have pushed products that are good for sales, but actually bad for the market. And I'm sure a lot of you know the protection insurance, the PPI product in the UK, which blew up in the early 2000s. And very recently in Vietnam, there was a lot of mis-selling of investment-linked products in banks. Again, very easy to sell, high take-up rate, but within 1-2 years, the whole thing collapses. Markets lose trust in the industry. And it takes a long time to build that trust back. So again, when it comes to innovation, we need to be ambitious, aspirational, creative, innovative, but with responsibility, and make sure we do it properly and take into account the actual needs of the market.
Thank you. This brings me to another aspect of what would we need as ingredient when we say insurance for all by 2047. During this Amrit Kal, we really need to find out the capital. Because when you want to provide coverage to so many people, we really need to have more insurance companies, more insurers, more capital, etc. So I think just a question, where will this capital come from, Hitesh bhai? And how can we really attract that capital? I mean, it may come from India, but I'm saying we also need a lot of capital coming from outside for actually to support this growth, because insurance and reinsurance business is very capital intensive. So where do we have that capital? How you get that insight? And you have recently seen the announcement, some of the initiative that the government has taken is you would have seen transition from 26% FDI when the insurance sector was opened. It raised to 49%, and now we're saying, it's 76% after that, and now we're saying 100% FDI is possible. But how do you see the capital, how will the capital will come in India to support this significant growth to really meet this objective of insurance for all during this Amrit Kal?
So if we talk from a reinsurance angle in terms of supporting insurance, there are classes where there is a more reinsurance need, and there are classes where the reinsurance need is much less. Say, for example, if we look at health, probably pandemic is the only scenario where there is a need for reinsurance. Again, motor third party, probably you don't need much of a reinsurance. The reinsurance requirement is very marginal. Motor own damage, probably maybe flood and earthquake, those are the perils. So number one is that where does the growth happen? Which segment, which classes are going to grow? How much of reinsurance it will need? Reinsurance is a capital. It is a borrowed capital on an annual contract. Most of the reinsurance on non-life side are annual contracts. If we look at last, say, 20 years, probably there is a problem of plenty. Following this global financial crisis of 2008, there was a massive liquidity easing, and I think that hangover is still there. If reinsurance industry has faced any problem, if at all I might put a label on it as a problem, it doesn't really see any hardening. The moment there is any major catastrophe event, it happened in 2005, there were 3 hurricanes, Katrina, Wilma, and Rita. Record level catastrophe losses, but then immediately the capital flowed in. There is ample capital available in the financial markets. It is the capital available with the alternative capital vehicles, say pension funds and other players in the financial market, which entered the reinsurance and insurance space by way of cat bonds and insurance-linked securities, which has resulted into muted hardening or a no hardening of the market. 2022 was the first time reinsurance globally saw the hardening, which it did not witness in a span of almost 30 years. Almost every single reinsurance professional saw the hardening, irrespective of his age, which he had never witnessed in his lifetime. Because there was a confluence of cat events, along with difficulties in the financial markets, along with the inflation, that is economic inflation, there is a social inflation, climate change, everything came together, and 2022 resulted into the hardening of the market, which was never witnessed. Despite that, now the market has stabilized, and I believe that there is absolutely no issue regarding provision of capital. In terms of being able to attract the capital, I think the measures like IFRS and RBC in Indian context is definitely going to help. That will bring a certain basic discipline and better risk management and better return on equity. So as I say it, capital should not be an issue, and of course, apart from the equity, there is also debt, subordinated debt. I don't see capital can be an issue for whatever growth we can achieve.
Thank you. And Srinivasa, how do you see the potential of artificial intelligence and machine learning? I think there's a lot of, this is perhaps the flavor of this time. And I mean, it's just not India. I think it's been talked about everywhere. What is the potential of AI and ML in perhaps the risk management or automating, just giving everything to the machine to really underwrite and take the decision? How do you see the potential of AI ML in the next decade or so, and what role it could play in achieving insurance for all by 2047?
I was hoping that AI session would be dealing with the AI part, and I didn't want to talk on the AI because it's such abused word nowadays. I think whatever we do loosely on technology, there is a tendency to call it as AI. And my sense is that AI would have a substantive role, but more importantly, technology would have an even more substantive role. I think businesses will be failing if they do not leverage technology as the potential it has. I can tell you there are instances within the reinsurance world that I am familiar with, where technology in general and AI in particular have been used for complex claims assessment, which would not have been thought of in the past. For example, a disability income product which gives claims on mental illnesses, for example. You have to go through reams and reams of papers given by the doctor statements and all that to establish whether a claim is payable or not. With the use of AI, it is now seen that all such complex work can be done through the use of technology. I think, as in all senses, the use of technology would be only possible when there is enough data that has been given to the technology to train itself. Whether the data is available, whether it has been stored in an appropriate form. In my opinion, there is a long way in India, because I find that data is not still stored, or there has not been sufficient investment in the data infrastructure. Things are improving, but I think we have still a long way to go. I think there are other areas where technology can help. My team knows in India, I have said that technology is not a separate function anymore. Technology is the edifice on which the entire business would be built. I think we can look at so many areas where human intervention can be eliminated and technology can be leveraged. It could be in the areas of pricing, it could be areas of risk management. There are steps, baby steps that we have taken. I would say that use of AI in insurance and reinsurance is very nascent. I think the full potential would only evolve, and I think it would baffle all of us as to what it can offer. That's my view. Thank you.
Thank you, Srinivasan. I think I was very greedy in terms of touching on various topics. I still have few ones, but I'm just seeing on the clock. So we're just left with, 4-5 minutes. I would like to really thank the panelists really to put all their perspectives on various aspects that we discussed. Maybe I can open for the questions now. So please raise your hand, and maybe if we have the mic, rotating mics, if we can just quickly, this is the first session, so maybe in the infra, can you just get the mics rotating and people can just quickly go to whoever is asking the question? Please your hand and the mic will rush to you. Any question? Others for this? On the back, please, can you get the mic there? Can you get the mic there, please? Quick. Can you please raise your hand again? I think that's, yeah.
Hi. Hello. Yeah, thanks for the session. So my question is, when we talk about Indian context and talking about the penetration in tier 2 and tier 3 cities, so is innovation more important or simplification more important to make those people understand how the products work?
No, I think very, very interesting question. I think it's important to really have products by the distribution channel, because if you have a face-to-face distribution channel and your channel, the distributor understands the product really well, is able to explain face-to-face to the customer, you can have slightly complex products. But I think we really need to make sure that our products are simple, easy to understand. We explain the customer what does the person, I mean, at least 2-3 things, right? Simple. If you live, you will get this as maturity. If you die, this is what you will get. If you prematurely surrender the policy, this is what you'll get. I think those simplification is extremely important. But yeah, I agree with you. I think the non-face-to-face distribution channel, it has to be very, very simple to avoid any mis-selling and the trust of the insurance sector.
Right. Thank you.
Yeah, I think there's one on the left-hand side. Can we just rotate the mic, please? And you can have more mics, please. We can have some more mics circulating. Here on the left-hand side. My left-hand side.
While the mic is reaching the respective person, also encourage everyone to use the application to have all of your questions there for the sessions, including feedback, so that, and if of course we can take limited number, we would be answering those on the application itself. Thank you.
Yeah, please.
Yeah, thanks, Sunil. So thanks to all the panelists. This was a very good discussion. A lot of interesting points discussed with all of you. My question is to Mr. Hitesh Joshi. So today there are reinsurers can exist in India in various forms. There's GIC Re, there are FRBs, IIOs, we have this new GIFT City. So what are the challenges that you foresee with reinsurers existing in all these forms in the market? And what's your view? Are there enough opportunities for all of these forms to coexist? Your views, please.
Sorry, I didn't get. What are the first you said?
So what are the challenges with reinsurers existing in all these forms in the market today? Like there are foreign branches, there's the Indian reinsurer, there are IIOs in GIFT City, and CBRs. So what are your views on the challenges with all these forms of reinsurers coexisting in the market today? And do you feel there are enough opportunities for all of these providers?
So let me just briefly touch upon how does the reinsurance work. Whenever any cedent or an insurance company buys reinsurance, one reinsurer doesn't provide the solution, most particularly on the non-life side. So there is a panel of 20 to 30, 40, 50 reinsurers, depending on the size of the program, who are supporting one program. Let us take one largest insurance company on non-life side. There can be 35 reinsurers on their panel. So there is a big cake for everyone to share. There is no question of very cutthroat competition. Now coming to the FRBs and reinsurance company and GIC, domestic domiciled, different structures in GIFT City, I think it is ultimately the taxation structure and the capital cost and corporate philosophy of a particular entity which is going to operate there. All these factors have to essentially merge. And if you look at almost any market, there will be different structures. There will be branches, there will be companies, there will be foreign companies, there will be MGS. There are various structures, and they arrive at their own equilibrium. So the point is that this is a subscription business. Cat risks are huge. Everybody wants to benefit from diversification. So nobody takes the entire, say, 30, 40, or maybe 100%. Everybody shares. Everybody follows. The market pricing is more a consensual pricing. So, and whether they have set up shop here as FRBs, they were participating from their headquarters even earlier, or maybe their Singapore hub or Hong Kong hub. So their coming to India has only taxation aspects and certain capital regulatory aspects, compliance aspects. So reinsurance is a global market and doesn't change anything. It remains what it is.
No, thank you. No, Sunaina, to your question, I think it just post-pandemic, some of these things, there are arbitrage opportunity in the market as of now. But I think as you see the recent collaterals, deposits and all that, and then you will also see the RBC framework coming in. All this, everybody will be on the same page. So I think, all this probably will get sorted in the next 6 months or so. So I understand, your question. Thank you very much. I think time is up, so people are staring at me. The organizers are staring at me. So,
sorry, I have one quick questions on this. So just would like to thank you, the entire panel, for the very relevant discussions. A very interesting topic actually. Role of reinsurance and insurance for all by 2047. I would rather love to amend this line by saying adequate insurance for all by 2047. That's the two aspects to it. I think one is under insurance and another is the penetration. So both are a challenge in India, and we have seen the success of mass market initiative in India, like PMJJBY. And also we being insurers face the challenge of reluctance of reinsurers supporting mass market initiative. That's being in the insurance side, I can say that. Being in managing reinsurance, I face this challenge. So my question is to Srinivasa, being FRB in India, on the major reinsurer. What's the future plan? So recently there is a discussion in the media saying that PMJJ's cover might be increased. The government is considering it, and there the reinsurer support is paramount because this is a enter unknown territory where the risk management will be pivotal. So reinsurers FRB preparedness in supporting this kind of mass market initiatives to make insurance for all by 2047 is a reality. Thanks.
Yeah, I think I can be quite direct in saying that reinsurers were not reluctant to provide cover. At least I can speak for myself representing Munich Re. We were happy to provide support. It's just that the terms at which we were willing to provide support was not something which was feasible given the rates were mandated at the product level. I think that's where the difference came about. As the covers are likely to be increased, we as reinsurers, we are happy to provide. I have been in a public forum with the regulator. I have said it openly. It's a product that we are happy to support without any profits. I just don't want to make losses. I can give up on everything. I just want to have the burning cost on a product that can enable more sales and make sure that people who need insurance get it. In that pursuit, I am happy to provide support for. And I don't know the approach from other reinsurers, but to bracket everybody as not being interested in providing PMJJBY may be a little bit of a stretch. I think we have been happy. We have provided quotes. We have provided quotes to many insurers. It's just that we have fallen short of the requirement of the insurance industry's price, this one. So I have told openly, and I reiterate, PMJJBY is a duty for all of us in some sense. And if the covers are increased, Munich Re would be happy to provide support on that. So you asked a direct question. I'm giving you a direct answer. Thank you.
Okay, thank you. I think time is up. So thank you very much for all your patience and being nice audience. Thank you very much.